right now. Hey guys, Justin Etherton here with Etherton Real Estate of Keller Williams Realty. I'm with Austin Lampson in OnQ Financial's office to do a little quick update on what the lending market look like right now, especially with the most recent European issues that are going on with Brexit, and how has that affected the interest rates and where we're at. So we're going to bring some more tips to you guys on a frequent basis, and so we wanted to get from the queen of lending here in Santa Barbara, the #1 top lender here, to let us know what's going on. So hopefully with that little introduction, she won't be blushing on camera. And what happened here? I got a notification. We're gonna switch. There we go. So we're live with Austin Lampson here.
Hello.
Say hi.
Hi.
And she's gonna give us a little update on what's going on with the Brexit. So if you have any questions, it looks like we got a couple of viewers here. Feel free to type them across, and I'll ask them to her directly if you have questions, anything about lending, what's going on, and interest rates. So yeah. Go for it.
So I think the first thing that is happening with Brexit is we're not quite sure yet where the final playout is going to be. What you're really seeing is that when there's instability in other world markets, people buy U.S. money because it's considered a safe haven. And all the prediction is that the money will be flooding out of Europe and more so into our markets, which is going to create a higher demand for pricing here for different properties, as well as keep rates low. So right now the bond is around 1.3. It's still under 1.4. Back in 2013, when you saw rates kind of shift and move back up from that super low that they were, they hit 1.5. So what that means in our world is that we're seeing rates drop about 0.25%. This is really most impactful when you're in the Fannie Mae and Freddie Mac world, when you're doing loans in Santa Barbara County of $625,000 or less, or in Ventura County of $603,750 or less. And why is that? The reason is mainly because these are the MBS market. This is the mortgage-backed security market. These are frequently sold, traded, things that you see all day long. So the jumbo market, loans that are over these amounts, loans that do not conform, the non-conforming market, you're not seeing as much drop, actually. There are a few banks out there that are trying to drive business because they don't perform as well as some of the other lenders in a processing standpoint, and you see some drops there. But the jumbo market is holding fast. Now, I will say, holding fast is still a really amazing rate. We have someone that's doing 20% down on $1 million purchase here in Santa Barbara, and they're 3.625 at 0 points on a 30-year fix. And that's amazing. That's truly amazing. In that same realm, if it was a Fannie or Freddie loan under that 417 or 625 limit, they're closer to 3.25 or 3.5. So what that means to me long term is that now's the time to hunker down. Now is the time to secure long-term financing. If you don't think you're going to be in the property more than 5 years, still get something longer, because then maybe you hold it and turn it into investment property, and then maybe you move forward, because that's going to enable you to save more money and have that stability for your family.
So quick question.
Yeah.
For those that are thinking about refinancing, thinking about buying, thinking about moving up, what would you recommend they do right now? Start right away, get it locked in, because I mean it takes a few weeks to get everything in. Your interest rate they see today is not going to be the interest rate they're going to get.
That's certainly true on a purchase. If it's a refinance though, we'd be able to lock you in today, and most refinances are taking about 30 to 45 days. On a purchase, the way we do it is we want you to be protected against the market. So we'll say, hey, here's some scenarios with today's rates, and here's if the market moves 0.25 point. Because I never want you to be in a position that all of a sudden now you can't afford your payment. We want to plan that long-term picture for you. So just start getting your ducks in a row and looking there. And quick tip about refinances, even if the rate is a point lower, it depends on how long you've held that property. For example, we have some clients, they have a 5% rate, but they've had that mortgage for 15 years. So they've paid off all their interest. They're really in the principal reduction phase, and redoing a new 30-year fixed rate will not actually save them money. It'll reduce their mortgage payment, but you're extending it out over a longer period of time. So for what we did for those clients is we did in fact refinance them, but put them on a plan so that they're paying off that mortgage faster. So they're still making that same level payment they're used to, but because the rate is lower, they're able to accelerate it and pay it off, and these folks are looking to retire in about 10 years.
Very cool. Awesome. Thank you, Austin. Again, if you have any questions at all, you can reach Austin at OnQ Financial, and we'll put up here in the comments in just a minute. Or Austin, if you want to give us your phone number to call her.
Best way to reach me is the office, which is 805-335-8200. Again, that's 335-8200. Or you can find out more information about me and how we operate at austinlampson.com.
Awesome, guys. Well, thanks for tuning in, and thanks for checking us out on our Thursday tips with our lender. Again, we're going to be bringing you some awesome content in the near future here. Stay tuned. If you have any questions or something you want to see, certainly give us a call or comment here about what you want. Justin Etherton with Etherton Real Estate of Santa Barbara. Like we say here, life is better at the beach. Thanks. Bye.